Thank you, thank you, thank you. Afternoon, Erica, Donald, Brenda. Hello, hello, hello. Stephanie, everybody else that's typing in, I appreciate it very, very much. Let me just get a couple things set up here to go. All right. So as we go ahead and get started here today, keep in mind that everything we look at is for educational purposes. Nothing is meant to be advice or recommendations, right? We've got a lot, and I mean a lot of stuff coming up here, folks. We've got patterns in a flash Q&A, Trading You, that's the 8th and the 9th. SPX Q&A is the following week. Vega Spreads Mastery each and every Monday, Tuesday, Friday. Mastermind each Tuesday. I'm teaching tomorrow evening. I'm also teaching the Trading You on the 9th. I've got two great topics for both of those. Power Hour Trading Coaches Playbook on regular schedule. Key to be free, we've got 3 of them coming up. 2 of them coming up 21st, 23rd, and 29th. 2 of them are 8 p.m. One is at noon. And then Pop, Covered Call, Explorer, E-Mini are all on their regular schedule program. If you like what you see, make sure you follow along with the various social platforms that we have out there for the latest and greatest of what we put out each and every day. Subscribe on YouTube, ring the bell, get our notifications, and all the other social platforms. But make sure you're checking out tradinglikeaboss.com. If you haven't bookmarked that site already, please go ahead and do so. On Trading Like a Boss is all of our free resources, day in and day out, are listed up there. So you should be registering right there. Easiest way to do it. Register for Power Hour. Register for Trading Coaches Playbook. New training, Key to be Free coming up. I'll talk about that in a moment. Right? Any of the free trainings that we've got out there, the free tools, resources, take advantage of those. They're all listed on this page, right? Anything that another coach gets us that says, hey, here's some free resources, we publish them right on that page. All right, here's our Trading Boss Manifesto. This is what it means to be a trading boss, folks. This is what we strive for each and every student that comes through Wealth Builders to be able to do, to move in the direction of becoming a trading boss, all right? You can download this on tradinglikeaboss.com. You'll be able to get it off our homepage very shortly as well. That one is up there, getting up there, hopefully today on the homepage. We'll have a section for it that you can download it, all right? Fantastic. Good sized group here today. Not bad, not bad, not bad. How you doing, Helen? And then the great freebies. So this goes back to Trading Like a Boss, folks. This is what you're going to see some emails come out on this week. Just a place to continuously remind you. We started with 6 items on this page, and I think we have 13 right now, right? And we just continue to add to them. So do not miss out on this page. You should go back and check it regularly. Make it your weekend thing. You go there on the weekend, you register for Power Hour, register for Trading Coaches Playbook, see what other free trainings are coming up in the near future. Register there, download some resources. And again, everything that's up there is free. There's nothing to buy or anything. They're all free resources. We're not going to go there just yet. Fantastic. So let's go ahead and start off with economic reports. I want to take a look there. And while I do, what I'd like to see is what trades you guys did today. And if you didn't do any today, but you did a couple of them the end of last week, let me see what those were as well. Drop them in. Let me know how you've done. Win, lose, draw, doesn't matter. Funded, non-funded, doesn't matter. It's all about hitting the enter button over and over again. That's what will get you successful. Get all the sexy strategy. If you're not hitting the enter button, you will not learn what works and doesn't work. You keep making soup and it tastes like garbage. You're going to stop making it that way and you're going to change an ingredient or something to make it taste better, right? Well, no different here. You got to change the ingredients, but you can't do that until you make the soup, right? You may look at the ingredients list and go, no, it looks good. I'm never going to make it. It looks good though. No, you make it. You don't like it, change something. No different on your trading plan. You've got to put that trade in, and then you're able to go about and consider changing it, right? So drop in those trades, and what I want to do is jump in first and look at the S&P 500. So we're up a little bit from where we were on Friday's close. Not a huge move, 22 points, not bad whatsoever. Nice move to the upside there today. We're in the middle of nowhere on SPX, and we're not near support or resistance. We are in a bullish bias. Another day or two like this, and we will become true bullish yet again, right? I think we're going to retest that 41.81. The 39.29 is my downside target for retest. I'm looking to see if we're going to fail and get back down there yet again. Was this a short-term bull in an overall bearish pattern? Can't say just yet. We did take out recent swing highs on the way up, right? So we had a swing high here. Actually, it was here. We had a swing high here. We had another one here. So we've taken both of those out. Our next swing high takes us up right here. So if we put a line up here, for recent swing high, and then we put another one down here for recent swing low, right? Those are the two major areas we're looking at. And right above that 41.59.77, the recent swing high, it's not recent high, it's a swing high. What is a swing high? There is a difference there, right? A swing high said I had a candle that looked like this, and maybe there was that was my high, right? I have another candle that looks like this. And I have one more that looks like this. So what in tune happened there was we put in a high, we put in a higher high, and then a lower high, right? That candle right there is considered the swing high candle. Same thing if you reverse it upside down, that would be the swing low if it was its lowest one. But this is the formation that you're looking for. Now the candle could be filled in, the candle could be solid. It doesn't make a difference. They could be smaller candles. It makes no difference. It's the relationship of the highs to each other, and looking for a high, a higher high, and a lower high, or a low, a lower low, and a higher low. That's what you're looking for to say, yes, that's now the pattern we're looking at. That becomes our swing low, or that becomes our swing high candle. Okay, so that's what we have right here is a swing high. We made a recent high and we pulled back, right? We had a high, a higher high, and a lower high. That's all, right? So it doesn't work. It's not this high, then that lower, and that lower. That's not, no. We had a that swing high set up right there. All right. There you go, Erica. I love seeing that. Erica's talking about her Apple trade going well. Me too. I gave one out this morning in market mornings, the training we do every day to get started before the market opens. So it was a good setup, really good setup. I'm excited about it. So now we back up a little bit and look at a slightly longer form picture there. That 41.81, that dark black line that just resonates, just drives right through the recent swing highs we've had on the SPX. That 41.81 is a critical level, right? And we pushed into it. Actually, we closed right there. We tested it again. We pushed up one more time. So 3 times out of 4 candles, we had tested that level and failed off of every one, each one giving us a lower high in there. So as we look at this pullback, the question is, where is it going from here? I don't have an exact answer. I think there are going to be some things this week that will lend itself to that. So as an example, if we look at Forex Factory, so I've got everything set right now for, well, let's just do it this way. I got it set for red and green. I mean, red and orange. So Fed testifies tomorrow. Powell also testifies Fed. Powell also testifies on Wednesday, both of them at 10 a.m. market open. You got ADP non-farm payroll comes out tomorrow. The JOLTS report comes out. On Wednesday. The JOLTS report is on Wednesday. Only thing tomorrow is the Fed. Average hourly earnings, which is unemployment rate. If we go over here and I add the yellow reports in, you see we have a lot more, okay? So, but I'm not really looking at the yellow. Consumer credit, okay. Not really that important. Trade balance, yeah. Crude inventory. We really haven't had a move in crude. Beige book, not really concerned with it, right? So I really stick with the orange and the reds in here. And right now we do have some things this week, not today, which is why the only report that came out today, which was yellow, did have some movement on the overall market because there was no more pressing news than that out there. But if you're in a trade tomorrow morning and 10 a.m. comes around and Powell starts to testify, if he's on time, if he testifies though, you've got to be careful that something that he says could throw the market, could throw your trade. You may be in an oil trade and something he says affects oil. It may not affect the rest of the market. It may affect your particular sector that you're in. So just a little bit of caution there for tomorrow and Wednesday as he's going to be speaking out there, right? So you want to be a little cautious there, okay? So, all right, let's see what you guys got in here for trades. So PK said SPY owned me today. Market morning spreads. DHI 250 still in. NSC pop candidates. Home Depot $60. Goldman Sachs 225. All right, nice, good job. None for Brenda. Apple trade going well for Erica. I love it. I've still got mine going as well. I've got a stop on it. Donald said up $500 on SPY and Qs this morning. Great job, Donald. Great job. Stephanie said Amazon. I think it was a bull put spread 35. On Amazon UPS 35.30 closed for 49% profit. Held for 13 days. 49%, 13 days, not bad. DKS up 120. Okay, I know what it is. It's bull put spread. 121.15 for a 42% profit, held for 6 days. Want to get out before earnings tomorrow, trading using Vega. Nice. So nice. That is awesome. Great job, everybody. Great job. I called Amazon, not Amazon, sorry. I called Apple out this morning. Right, on market mornings. All right. Nope. Apple. Don't know what happened there. All right. So I called out Apple this morning. Yeah, there you go. PK said congrats all. Yes, everybody, great job. Great job. I called Apple out this morning, had a great gap up, and then I wrote down the number 153.50 on a piece of paper, and I went over and transferred the lines over to my intraday charts, right? And if we go and look at Apple, let me make this full screen. So on Apple, and this is, I've seen this become very helpful lately with students. So first candle up, we make a nice gap. We blow right through the 153.50. We do an intra-wick retest, right? We could look at a 1 minute candle in there. And all right, so we look at a 1 minute candle. We never really got a retest back to it again, right? It was just that 1 minute candle. We pulled back a little bit and we just went up from there. If we go back to a 5 minute candle again now, what happened? Well, we moved up. So for me, this was my morning, right? First candle, I'm in position number 1 in the chair. I'm back here. Nothing happening, just watching. I'm waiting for a pullback. I'm in position 1 in the chair. I'm in position 1 in the chair. First 15 minutes on Apple, I am back here. Can't reach the keyboard, nothing I can do, but watch objectively. Overall, what am I looking for? A pullback. The next candle, boom, right? Rising 3 type candle in there. We get a huge pullback into the market and we close right at the 153.50 level. Actually, our closing price there was 153.60. So we're off by a whole dime on $150 stock, right? So again, if we go back, this is position number 1, 1 in the chair. Right now, I'm in position 2. So on that third candle, I was back here. When the fourth candle closes right at support, I'm in a straight up position. I'm not leaning forward yet. I'm in a straight up position. I'm very hyper focused on that candle on that chart. Right? If I've got it on a different monitor, because I have 6 monitors on this system, another monitor, laptop that has my Omega charts on it. So I've got 7 monitors going for the market. If it's on a different monitor, I would just move it over and put it on a primary, which is where I'm looking right now, the one I'm teaching you off of. That's when I do most of my work off of. So I sit up straight. As we start to bounce on this next candle, so we ran up, we pulled back, and we bounced. As we started to bounce, I'm in position 3 in the chair, which means literally I'm sitting on the edge of my chair, hands on keyboard, bringing up an option chain, ready to trade, right? And it's not hard for me to look at something and say, what option do I want to trade on this? Okay, let's try this here. Let's see if that worked. Okay. The option chain wasn't active, so it didn't change it in the option chain. So what did I do? Or what would I do? So let me grab a drawing tool. Actually, let's grab a box, right? I want to find a 65 to 85 delta. So, and I'm bullish. So right now, realistically, the only I could trade is the 152.5. Right? I want to make sure we have at least 100 open interest. I think we got that covered. right in there. So that's the strike I would trade. If let me see. Yeah, so just to show an example, normally you're going to get more than one strike in there. So here, if we go down to the next week, right, I've got a 69, a 79, an 81, an 84. Any of those options would work, right? But I would choose the 69, right? Now, but Rob, the 69 meaning the delta. The 79 delta has 95,000 open interest versus 23,000. Does that matter? You know, as long as it's 100, that's what counts. But if you said, all right, I'm going to go with that because of 79 delta has so much more open interest, awesome, you go for it. I'm not worried about something like that. And it's Apple. You're not talking about a huge amount of money. You're looking at, instead of spending 5.25, you're going to spend, call it 7.25. Easy math. It's $2 difference. And the question you've got to ask yourself is that $2, which is also $2 more of risk, is it worth the entire 10 cents difference you're going to get for every dollar the stock moves? Apple right now is up $5. It didn't start that, you know, it didn't start out where it closed Friday. It's gapped up. So you may be up $1.50, $2 right now, whatever it is. Even if you're up $2 on the option, on the stock price, the option is going to go up 10 cents more for basically for every $2 the stock moves. For every dollar stock moves. So you're talking about the option being worth 20 cents more. Was that worth $2 more of risk? To me, the answer is no. You make that decision. That's why there's a range, 65 to 85 delta, right? Check the theoretical value, which is also known as the fair value. We have a column of it right here. So if we're looking at, if I just underline here and use the 69 delta, we're going to pay $528 if we bought it right now. It should be worth $594. Yes, I like it. Here we're going to pay we're going to pay $766 and it's worth $718. Aha. See, as we start getting deeper in the money, $803 is what we're going to pay. It's worth $840. Ooh, I like that. Right? So if it's undervalued, meaning my mid price is less than my fair value, that's great. If it's overvalued, you have to make that determination. Does this work for me or not? Let's see. So Paul said, for instance, Apple, the current week only had one strike, but next week had 4. So is it okay to go out to next week? I thought you prefer current week. I do. The only reason, Paul, I went out to next week was to show that normally we get more than one strike. Right? I even looked on the put side and we only had one. But no, I would not go to next week. Realistically, could you? Yes, you could. It's just, I'm spending another 7 days, 8 days of theoretical value, of time value, not theoretical, of time value in that option by going out another week. So I'd rather not if I don't have to, right? If I can get away with it, I'm doing the one for this week. You're quite welcome. You're quite welcome. All right, so let me take that down. All right, so Apple was a great little setup there today. If we go back and look. Move up, retest, and a bounce. There's the entry in there. All right. So I'm in the option at about 460 right now. And that is, we got an option chain back here. Good. We still have the option for Apple. That's the 150s. Right now they're at 660. So I'm in a 460. They're at 660 right now. Right. So $2, not too bad. Right, got a trailing stop set on it. Life is good. Erica said, yeah, thanks for the Apple trade this morning. Yeah, there you go. Folks, listen, I'm telling you, if you're, what are we doing here, right? Every single day I give 4, 5, 8, 9 candidates. I try to cut it off by 8 or 9 as a max, just because my goal is to get it done in 5 to 8 minutes long. That's it. Sometimes we kick over to 9. But it's rare. It's not the norm, right? We start every day off with that of, here are a couple of candidates for you. If you find one, listen, I found others that I liked, looked at the premium this morning, wasn't there, right? Okay, so I don't take that trade, I'm good, right? Apple, because I like them as a company, know them, trade them through power option plays, yes, I'm going to focus very heavily on those guys first, right? Which we did. So that was the biggest trade so far today for me. Next, we had a pivot trade on Qs, right? So on the NASDAQ. So we gapped up on the NASDAQ. I wasn't looking to do anything bearish. I'm only looking for the bullish moves. So we barely closed above. We came back below. On the second candle, we got back above. We got back below. We got above, retested, and bounced. And there's your entry, 1010, right in there, was the entry. And, you know, that was around 301.5 or so. Resistance was the R3, which is 303.25. So it's not huge move in there. It brought in about 60 or 70 cents, somewhere around there. So it wasn't a huge profit for us, but 60 cents on 10 contracts is $600. I would venture to say some of you don't have to go to work today if you found an extra $600 in the market. Just a thought, right? Can any of you, if you were able to make, let's not even call it 600, if you were able to make $500 a day in the market, would you need to go to work any longer? Give me a 1 for yes or a 2 for no. 2 meaning no, I don't have to go to work. Or yes, I still have to go to work. Give me if $500 a day does it for you, right? 1 for yes, 2 for no. You still got to go to work. Remember, $500 a day. That's $2,500 a week. Right? Where did that just open up? There we go. So $500 a week times 5 days. That's $2,500 a week. Times 52 weeks, that's 130 grand a year. Okay, mixed bag, some yes, some no, right? That would work for me. Yeah, there you go. Donald said I would not have to work. See, guys, that's what it comes at. And now some of you in different places, some of you like, Rob, I make $1,000 an hour. Okay, beautiful, right? The average person is not, even in this crazy paying environment, right? Of what some people are getting paid for working at McDonald's, and which are really meant to be starter jobs, not jobs. Okay. That's why nobody works at McDonald's anymore. They got like one person in there, everything else is a machine. They're talking about the drive-through being, they're working right now on drive-throughs in McDonald's that are going to be a conveyor belt, which will bring you your food. They'll make your order and it will bring it on the conveyor belt to you. You will not even have a person that's there. All right, can I have napkins? Yeah, wait, we got to go back and get somebody to get that for you. Okay. So better ask what you want up front. Let's see, Paul said at this point I'd settle for $100 a month. I understand the settle part, Paul. You know, it's just, and that's the, I want to get good at this talking, right? Is if I could just make my first $100 at it and be able to do it consistently. Yes, I'm with you. 1,000,000%, I am with you. It should not be the goal at all. The goal should not be that. And if you guys look on our calendar, we have, I'm not sure when it's coming up. Well, it would be so if you know, if it's a free workshop, it's in this light green. Okay. So you got Trading Coaches Playbook, you got Power Hour, and here are 2 key to be frees, right? And then there's another one the following week. So there's a Tuesday, a Wednesday, and a Thursday. There's an 8 p.m. and a 12 p.m. Eastern time. Inside of that training, my goal there, and I do this once a year, my goal there is to share with you some things to help you figure out what it takes to become that consistent trader. I can help get you there if you're willing to submit and do the things I ask you to. I can help get you there, right? You just have to be the one that does the work. I can't do it for you. I could show you what has to be done, but I can't be the one to do the work for you. Are there people that do this that are more successful than me? Yeah, absolutely, without a doubt. Students that are more successful than me, right? Listen, if the coach on the team was the best ball player ever, then why would you need anybody else, right? We can't all be a Babe Ruth or a Reggie Jackson, right? Or whomever. I don't know. I don't follow sports that much anymore, right? I can help get you there. Get registered for that key to be free, right? Lee, could you drop that link in there for key to be free, please? Erica said, I love trading. Wish we were doing this full time. I know. Jennifer said, also regular job, 40 plus hours, and trading mostly half days and mornings. There you go. Yeah, Erica, that's a very valid point. The one trade away challenge, folks, was amazing. We've got students that have come out of there and said they made 6-figure week after coming out of the One Trade Away Challenge, where prior to that, they were kind of hit and miss on getting it right. There was just that one thing they saw that clicked inside of that whopping $49 program for One Trade Away Challenge, right? Here's what I'll do, Lee. Can you grab me a link for One Trade Away Challenge, please? Here's what I'm going to do, Lee. You're going to have to make note of this and get this over to Suzanne. Today is the 6th. Okay. It's a Monday. One Trade Away Challenge starts today. It starts on Mondays. Okay. Starts today. If you guys register for One Trade Away Challenge and an entire week, you can go through the program. So the first 25% of the program, because it's a 30-day program, you go through the program, come back and say, you know what? I don't think it was worth my $49. I want my money back. We'll give you back your $49. No questions asked. Right? Just by the end of the day on 13th, make sure you take a note of that, please, Lee. By the end of the day on the 13th, if you want your $49 back, it's yours. Folks, your $49 doesn't really make that much of a difference to me. The goal here was to help you to learn how to trade. Did I put a lot of work into it? Yes. Do we want to get something back for it? Yes. Can't do everything for free. It doesn't quite work that way, right? It's not Socialism 101, all right? But $49, it's a great training program to get you started. All right. Let me bring us back in if we can. So the Qs only gave us about, I think it was 60 or 70 cents. Something like that. A buck. It was under $1. We got under $1 for it, so it wasn't anything crazy. On the Q SPYs, I had nothing. I had no setup on pivots for SPY. I got this breakout right here, and then never retested back again. So nothing for me at all. All right. So let's see. Lee, what is that link that's in the bottom of the screen there? Is that for the One Trade Away Challenge, or is that for something else? I don't know the code that's in there, so I'm not sure. If it just whatever it is, make sure it's One Trade Away Challenge, please. Or one of them is One Trade Away Challenge. All right. So let's go ahead back into the presentation. And will the downtrend continue? Okay. So when we do these topics, we do them on Wednesday, the week before. So last Wednesday is when we did this, right? We already had taken our bounce in the market by last Wednesday, right? So here we are, Monday, Monday, Friday, Thursday, Wednesday. So actually, we had not bounced yet, right? We were in that. It says we need SPX, not Apple. Thank you, Lee. I appreciate it. So there was Thursday's candle. This was Wednesday when we did it, right? We had this bearish downturn going on right in there. How are we doing as far as market goes? Are we going to make this continuation move to the upside? All right. Here's the very first thing you need to see, right? We had this amazing move up, this nice move down, and we got this bounce, right? That is an upside down H. Right, a regular H, a Fibonacci H, and now an upside down H. Okay, or actually, it should probably be a little more like this. Right, there's an upside down H, and what happens is that transpires what takes place off of the 618 is the ideal one, or off of the 50. Right. You can see we pulled back, didn't quite make it to the 618 here. We tried it again, failed. We got the bounce off the 618. We normally go 1, 2.5 lines. Now, that doesn't mean we don't go further. It doesn't mean we don't go less. And I'll never get it right, folks. I just never remember the number no matter how many times y'all remind me. In a 2 standard deviation move, which is 2 fib lines, in a 2 standard deviation move, we have somewhere like 96 or 97% of all data points fall within that first 2-line move in a 2 standard deviation move. In other words, we go a little bit more than that, and that's about the end of it. There's not a whole lot more beyond it. Yes, we can move more than 2 lines. I've seen it over and over and over again, right? Off of these bounces off of the 618. But that upside down H has given us some bullishness. Right now, as I talked about, what I need to see happen, what I need to see take place for me to have any interest in the overall market is I need to get back up to this previous swing high and ideally close above the 41.81. 8 will definitely have crossed up through the 21. The 55 will still be on the bottom. So you'd be in the right order. That's 55, not 35. Okay. You'd be in the correct order there. But that's what I'm looking at for bullish. So what does that mean for right now? I'll take the trades that are at hand. I will take a bullish trade or a bearish trade. I'll trade the direction of the market without any question, right? Easy peasy. But I am not stepping out there saying this is time to go long. There are some analysts that are still talking about us hitting back, not at the lows, but coming back and testing those 37, 3,800 lows right in here we came from. I'm not hearing a lot of people say we're going to go back and retest the recent swing lows that came all the way down here, which is 3,500. I'm not really hearing a lot of that at this point. And I'm also hearing a lot of people talk about a lot of chop taking place over the next couple of weeks and or months. The Fed, which it blows my mind that we're seeing the moves that we are today. One of the Fed presidents she's been very vocal, very dovish, right? Of the move that the Fed should take, steady and slow wins the race type thought process. And she was like cutthroat over the weekend on a news that she was on of, we've got to get more aggressive and we got to get those rates up and we got to get inflation down. And she was very in your face. And even on the note of her conversations that she gave, her interview that she gave, the market is still up today. So the Fed has a lot of strings to pull yet, right? And we can keep saying, interest rates don't matter. They really don't make a difference. Here's the problem. If anybody knows this, let me know, please, right? How much is the average credit card debt today? Only if you know it. Don't guess it if you know it. If anybody has, I haven't looked recently, but I know we were well over 20 grand per person, all right? If anybody knows what that is, let me know. I would really like to, let me open this up. All right. So credit card debt per person. All right. I'll make a number up. If someone gets the correct number, we'll put it in there. Okay. So let's just say it is $20,000. I know some have more. I know some have less. For those that have more, this is going to get a lot worse in a second. Right. 1 year ago, or let's say March of 2022. Your interest rates might have been on that credit card debt, right? Your interest rates on that might have been, 19%. Right? So if you're looking at, yeah, Jennifer, that is definitely low. And I guess it depends where they're pulling from, right? Where'd the calculator go? Okay. So if you're looking at a $20,000, right, times 0.19, 19%, you're looking at $3,800 a year. In interest. If right now, if March of 2023, if we're at 22%, right, what happens to that interest rate now? So if we look at 20K times 0.22, that's now $4,400 a year. Right, but how about this? Miss 1 or 2 payments. Okay, then what happens? Oh, you're then at 29% for the year. They're going to cut your amount allowed to borrow down. They're going to put you at 29% a year. Now you take the same 20K times 29%, and you're at $5,800. You guys see where I'm going with this? And this is just $5,800. This is just on your credit card debt. What's going on with housing? Okay. What's going on with housing when you look at interest rates there? You know, if you have to buy a house or you're ready to buy a house, you know, interest rates are killing people. Look at what's going on with insurance. We own a home in Florida. We're looking at another one now. Insurance prices are astronomical. When my dad, we paid $1,200 a year, we now pay over $4,000 a year for the same exact house to insure it, right? And our insurance company is one of those that are kind of, are they going to stay in Florida or not, right? So lots of concerns out there on what's going on, dollars and cents wise, of what people can and cannot afford. Okay, keep this in mind. Let me move this out of the way. All right, there we go. Keep this in mind. We're driving the market up. I don't think we're ready for crash, but I don't believe that the pushes that we're making on the market are valid. Not yet. Again, I could be absolutely dead wrong, and I'll be the first one to admit it if it happens. It has happened before. Ask my wife. I mean, where I've been wrong. Ask my wife. She'll tell you I have. I have no problem being someone to admit it, right? I don't plan on being right all the time. If I could be right 80% of the time, I'm good. 80% of my trades are winners. 20% go against me. If I can keep it that kind of ratio with everything else in my life, I'm happy, because I don't expect to be the expert and perfect on every decision that I make. Being a trader, you're going to make a lot of decisions. Being an owner of a business, you're going to make a lot of decisions. Being the head of a household, you're going to make a lot of decisions. You can't say every decision you made with your kids was perfect. Ask them, they'll tell you. Right? And if you don't have any, I'll lend you mine. They'll tell you how it all works. Right? Jennifer said, as debt scores get lower, interest rates go up, potential to borrow is less, you can't purchase as much house, for instance. Right. And there are a lot of people that had these balloon payment mortgages due, right? Where they were planning on, they couldn't afford to put enough money down. So the mortgage broker convinced them to do a balloon payment, and they could just refi it in the next 5 years. They're getting ready to come due now. They would have been at 3% or 2.5%. Now they're at 7% or 6.98, whatever the numbers are right, you know, for today. And there's no way they could afford it. They couldn't afford it then. They can't afford it now. Right. So there's a lot of things looming on the horizon right now that have the opportunity to really mess us up. All right. So I'm getting a couple of reports back that it's about $6,100, not the numbers that I've seen. I got to go pull the site that I got it from. Let's see. Mine was probably household versus individual. Not sure, but I can check that out. Yeah, and we haven't, and Erica, we haven't even gotten to, again, where someone has student debt or someone has mortgages or, you know, other consumer loans, car loan, auto loans, which are, you know, absolutely insane these days. My next door neighbor is a Ford guy, has been, you know, he'd worked for Ford for 40 years of his life. He gets this program every 2 years. He buys a new car. He gets it at dealer cost, right? Whatever the dealer paid, you know, if the car sells for 28 grand and the dealer paid 22, he gets it for 22, right? He gets the same thing for warranty. He buys everything of 7-year warranty, 0 deductible, car loaner, tire replacement, no cost for anything, right? He does it all. He went to go buy a car a year ago. Because my cousin was looking at his car that he has now, which had a whopping 11,000 miles on it. She was looking at the car for her daughter, and he goes to look, and they said, "Well, we'll waive the additional fee, but you're going to pay sticker." He's like, "Sticker? I'm not paying sticker." That was the best he could do. My daughter, when we went to negotiate her car, she was $2,500 above sticker the first day we went. They ran a holiday special. It was $2,000 above sticker. Is what we wound up getting her car for. We went to another Mazda dealer and I'm sorry, Mitsubishi dealer, and they were $5,000 and they would not budge on it. $5,000 above sticker, period. That's it. Sticker says 28, you're paying 5 more on top of that, 33, right? There's so much of that out there where people are paying these higher prices. Credit card companies used to insist that the store could not do a surcharge if you use your credit card, or else you wouldn't be able to. I reported a company for doing it to me one time, and they got in trouble for it. American Express gave me the monies back, actually, for the difference. Today, it's a norm of you go to a gas station, you go to a restaurant, and we word it very eloquently, right? You get a discount if you pay with cash, right? And again, people are just worried about cost and what's out there right now, right? It's not a great place to be. So Trip had put in standard deviation. 1 standard deviation is 68.2. 2 standard deviations is 95.4. I said 96.7. 3 standard deviations is 99.7, which means if you move 3 lines on fibs, you've moved 99.7% of the data points that are available already. Doesn't mean it can't go further than that, right? And normally you'll see a pullback in there first, right? It's not from the first day in time that we move more than 2 or 3 fib lines. It's on the run, right? You get to move up and you pull back. You get to move up and you pull back. You get to move up, you pull back. You get to move down, we pull back, down, we go back, down, we pull back, right? So we're seeing that type of move, that stair step pattern right now in there, okay? Tripp said CNBC headline, credit card debt in US hits all-time high of $930 billion. That's the point, right? Tripp said 3% fee a doctor for using my freaking HSA debit card. Someone had bought us a gift card for a local restaurant, Italian restaurant. And when we went there, we paid with the gift card and they charged us a 3.5% surcharge for credit card. I said, ma'am, this was a gift card. It's not a credit card. No, it's a card. If it's not cash, it's a card. We charge 3.5%. I said, but if I buy a gift card with a credit card, do I pay the fee? Oh yeah, if you buy a $100 gift card, it's $103.50. And then on top of that, you're charging me the same $350 for using a gift card? If I use the $100? Insane. Insane. All right. So the topic of, is the downtrend going to continue? I guess a better topic would be, are we going to hold a steady position here? I think the type of move we made with this big, strong move up had a bunch of little pullbacks in there, all good. That was a good pullback in here, good, strong move up, a nice pullback again, right? I mean, if we stretch this old fib out, this pullback in here was 38% from this fib, right? Not from the overall move, but from this fib here, right? It was 38%, okay? So are we going to continue a steady run anywhere for any time soon? The answer is I don't see it. I see the chop, I see the up, I see the down. I think earnings are good. I think this year we still have the opportunity to fall apart some and definitely go back and retest the previous swing lows we had here, that major low that we put in from the pullback. Do I think we're going all the way back to 3,500? No, I don't, right? That doesn't mean we can't. Doesn't mean we won't. I think a lot of it's going to come down to how long we keep going with inflation, how long we keep going with housing, and if recession kicks in, right? Because then it comes down to how long will it be? How long will the recession last for? We get away from inflation, how long is the recession going to last for? All right. Okay. Hey, go ahead and drop in the candidates you want me to take a look at. It's time to check those out for you. I cannot believe how fast this day goes here. Let's see. Timothy. Hey, Timothy. Let's see. Intel is the very first one. Let's see. Is Rick in here today? Rick, hey, buddy, I got your email. Thank you very much for that. I appreciate it. And seeing Timothy type his name in there reminded me of you today, Rick. So appreciate that. So we look at Intel. I've got a fib already drawn. Is it a good fib? I don't know. Oy vey. So here's what I'm going to do. I'm actually going to pull this fib out to this bottom here. There we go. Because that little move in the middle there was more of a hiccup than anything else, right? Ooh, what a nice fib channel going on there, Timothy. I like it. 25.75 up to 29.25. Very nice fib channel. I'd scale out of half it at the midpoint. But if we look at where we're at right now, we're in a bearish neutral bias. All right. What does that mean? We can only take day trades, no swing trades, no directional, one position. You should only be taking a clear and concise entry, ideally in a bearish move. Right now, could you take a bullish move up to X? What's X? Right? Some kind of ceiling, which we call bumping our head on ugly. What would that be? If 2680 was an acceptable resistance level for you, which means you're getting out somewhere down below that, then awesome. You go for it. And then, yes, you could take it on a very strong bullish day. Other than that, I would say let it fail below the 25.74. And then we're looking for another continuation push down, which takes us down to 23.74, about $2. All right. From there, Timothy was asking for GE. I have not done anything with these guys in just so long. Let's see. All right. So we did some kind of split on these guys, didn't we? That shit was there. Yeah. Okay. So GE did a reverse split. You can't see it because you've got dividend and split came on the same day. We did a reverse split. So we were trading on the close. It's hard to see it. So we were about $13, $12. I can't really tell. Oh, you know what might help? Let me go over here. All right, there we go. So we were trading about, call it $13 a share one day. The next day we wind up trading at 104. Right? So I can't really see the numbers in there because dividend is in the front. But we did a reverse split. Yeah, if we took $100 divided by 12, what's that? 8 for 1 for 8, something like that. We reverse engineered this and said, okay, we're going to take 8 shares away from you. And I don't remember the exact number. If anybody knows it, drop it in the chat for me. We're going to take 8 shares away from you and give you 1 share at $100 a share, right? And they've actually held up fairly well, all things considered, for that amount of time, right? Because that usually doesn't bode well for the stock, those reverse splits. Okay, now let's go back to template 2. No, don't save it. All right. Okay, so we're adjusted there. Perfect. 1 for 8. Thank you, Trip. Yeah, I thought it was about 8, but just always good to get some clarification. So I am looking then, Timothy, at, we have a fib in here. And we have another fib here. Which one is bigger? So that right there is 21.25. This one right here is 1907. Okay. So the 21.25 closest to the right side of the chart is better, right? Because it is bigger. Doesn't mean we get rid of the old one. We can leave the old one in place, all right? So now we're going to pull this out. And what are we looking at? 76 to 81 is $5. So we need Fibbits on both of these. So we're going to apply a negative 136 and a 118, which are Fibbit levels. If you're not sure how to use these, and let me put it in, negative 136, 118. All right, good. If you're not sure how to use these, go over to tradinglikeaboss.com. On the left-hand side, Fibonacci, today's power indicator, that will teach you how fibs work. It's a 60-minute training, comes over the course of 3 days. So you get an email for the next 3 days on it, okay? So Timothy, it's had a nice move already. It is at a bias. It's a bullish bias. It's a rank of 2, meaning it's not near a moving average. There's no confluence, but it is near a key level, right? So with that being said, if we can get the bounce off of that $87, we're looking at 89.25. as resistance. Okay. All right. I hope that helps. Let me know in the comments below. Let's see. Trips said AMD is the first one. Trips got his trio in there. So AMD, I like the pattern. All right, a little bit of a bullish bounce today. It is a bullish bias. True bull on top of that. It is true bull. Downside target is 80. Upside is 84. We're at 82. So we're right in the middle right now. So a little caution there on AMD. Itty bitty machine, or better known as IBM. They're in an overall bearish pattern right now. They were at a bearish bias with a rank of 1. This is today's pattern. So if we can close here and fail, 128 is the downside target. Right? If we break to the upside, you've only got room up to 132.65. So you only got maybe a buck and a half of movement there. So a little bit more cautious on IBM. And then it's Micron. Let's see a bigger picture. Let's unscrunch it there. All right. So the fib itself is a little bit older, but still good. Let's pull that out. All right. So right now, we're in a bearish bias, not true bear, but good enough to take a directional trade. Downside target is 56 and then 53.5. Upside, well, we're right at that 57.5 and then 58.75. So we've got much less room to the upside than the down, but we're kind of in the middle. So I'd be very cautious on anything with Micron right now until we can get a directional move there. Hope that helps, Trip. Eric is saying Amazon and Google still have shares of stock for each holding long term. Oh, you still have them. Okay. And me too. Me too, Eric. I have Amazon, I have Google, I have Tesla. Those are some long-term that I bought after splits and have continued to buy. Some are doing great. Some are doing okay. Some I'm killing it on, although I'm underwater on the stock price, killing it on by writing covered calls, right? It's just a matter of what you're looking to do with it. I'm all for the longer term, but it's investment money. It's not trading money for me. Two different piles, if you would. Jones said GE also did a spinoff into GEHC on December of 22. Now we have GE and GE Healthcare, which is the HC. All right. Timothy said, thank you. It was greatly helped greatly. Good. Excellent. All right. What are the stocks you guys want me to look at? We still got about 5 minutes left. We can wrap it up. If not, or if you have other questions, ask them. That's what this time is about. What can I do right now to help get you over that hump? What can I do right now to help make you a better trader? All right, so let's see. Brenda dropped in the Qs. Oh, I missed that, Brenda. I apologize. You were in the middle of all that split stuff in there. That's why. QQQ. All right. So right now we're in a bullish bias. We're true bullish. If we close where we are, it's a true bullish bias. It's a rank of 2. If we can get that bounce off the $300.76, 308.70, man, nice move. $8. $8. We've been there before, not long ago. So very, very doable. Amazon. Okay, so Amazon right now has gapped up and is pinned between the 8 and 21 moving average. It's pinned between the 8 and 21 moving average in there, right? 91.25 is the first downside target. Ideally for me, we get down below there, retest, and fail. You know, if you look at a baseball pitcher, right? And Rick knows this extremely well, whose nephew is a professional baseball player, right? Pitcher, right? If you look at a baseball player, right, what makes them so desirable? Yes, if they can have a range of pitches that they throw, that's great. But I also want a pitcher that's got a go-to pitch that is just absolutely killer, whether it's a slider or a curve or whatever it is, sinker, right? Whatever it is, right? I want something like that in there. That killer pattern. right? Very simplistically, there is the same type of pattern in the market, right? And this is what it is. Move down and close below a resistance level, whatever it is. Retest and fail, right? Off of that fail is where your entry is. Not on the bounce, not as it's sitting at that resistance level, as it's already failed and rolled over. You should have an amount that says, if it drops off of this level at $1, $2, $10, whatever it is, I'm taking the bearish entry. That should be your set of rules. That right there, that's the pattern. That is my slider, right? My upside down Flint rubble bubble cape, right? The killer pitch that no one can hit, right? This one right here is the killer pitch that everybody should be desired, to have, is this type of setup. All right. Okay, got it, Brenda. So Brenda was confused on what I was saying on the Qs. So Brenda, on the Qs, retest at $300.76 and look for the bounce and the move up to 308.70. To the downside, I'd be very careful. I got to break the $300.76. I got to break the 300, and I have resistance or support rather at 297.10. So I don't have a lot of room in there between the 300 and the 297. All right. Does that make more sense, Brenda? Timothy said, how to become a consistent trader for full-time trading for me. Okay, LOL. So very simple. It's actually very simple. Right here in the very top of Trading Like a Boss, Key to Be Free, that's what this is about. How to get you, anybody, to that point where we can point you in the right direction towards being a successful trader. Now, I want to make something abundantly clear. I'm not guaranteeing anybody's going to make that. I'm not guaranteeing anything, ever, ever, ever. We don't make guarantees, right? Period. Because some of you are going to come, you're going to do exactly what I tell you, and you're going to see some results. Others are going to come, and you're going to do nothing what I tell you, and you're going to wonder why you didn't get the results that I talked about. That stuff Rob talked about doesn't work. It didn't work for me. Yes, but you got to use it. And I'm no different. I am absolutely no different, right? I do the same exact things. If there's something that I want, but I really don't want to do the work, and then I just gripe at it because it didn't happen. Oh, man, why not me? Well, you got to place a trade, practice first, non-funded first, but you got to hit that enter button. You're welcome, Brenda. Good. All right. So Lee dropped a whole bunch of links into the members area, into the chat box for you. We'll leave the room open for a couple of minutes. He's dropping it back in again as we speak. We'll leave the room open a couple of minutes. If you have some questions, by all means, drop me real quick. If not, grab those links and go ahead and get registered for the trainings that we've got coming up. And there you have it. Folks, I hope this was worth your time today. I hope you got something really good at it. If you did, you can give me a 1. Very much appreciate the feedback. If you didn't, give me a 2. I definitely appreciate the feedback. Don't worry, we will be black book. No, I'm kidding. I'm kidding you. If you didn't like it, I want to know that you didn't, but I'd also like to know why. Not just that, oh, this stunk, I don't like it. Tell me why. If there's something we can do to make it better, we absolutely will. So with that, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. Take care, everybody. I will see you all at our next update. All right, bye for now.